Well, today we're diving into one of the most important topics facing mortgage lenders in 2026, and that is borrower retention and recapture. Volume is stabilized, margins are tighter, competition is relentless, and lenders are realizing that their most valuable asset isn't just new originations, it's the customers they already have. But retention isn't just a strategy or a set of metrics, it's a leadership mindset. And increasingly, it's being shaped by the perspectives of women, leading through volatility, complexity, and change. At CapitalW Collective, we focus on elevating women in capital markets and financial services, especially at moments like this, when clarity, preparation, and decisive leadership matter most. This episode reflects that mission. Today, we're joined by two exceptional leaders who bring deep experience and thoughtful perspective to this topic. Tammie Gravlee from Bank of Tennessee and Michelle Richardson from Plaza Home Mortgage. Thank you for joining us and welcome, ladies.
Thanks for having us.
You bet. Together, we're going to explore how women leaders are navigating seasonality, pressure, and uncertainty in borrower retention while building trust, alignment, resilience across their organizations. So let's jump into it. All right, so the first thing we're going to tackle is this topic of leadership perspective and seasonality. So from your perspective, how does navigating this market as a woman executive shape the way you approach seasonality in borrower retention? Tammie, why don't you have us take that one?
Sure. Thank you, Salpi. Let me start off by saying I think the first thing that as a female that I've had to learn is one of the biggest challenges for females is balancing assertiveness with approachability. That's something that women leaders are often judged on more critically, I think, than a male might be. A female can be assertive and rough, and we get called different names. It's kind of expected from a male perspective. So having the ability to be able to keep who I am in perspective as a female leader and how I've been actually treated by female leaders and male leaders, I try to look at the two of those and identify the things that I think are most important to a strong and a stable team. And so identifying that first of all, and I still work on that really, really hard. I've been called the Ice Princess, been called a lot of different things. So managing to that can be a little difficult because we tend to be more of, I guess, can I say the motherly instinct a little bit, or most of us are anyway. But I think that leads into also, for me, empathy-driven leadership. Understanding and identifying what your team needs in order to stay on the highs and be in the lows. And that can be really difficult. If you've been in this business for a very short period of time, you probably, well, all of us probably do this, but you get up every day and go, I don't know if I can take the instability of how we're always on a high and then we're always on a low. There seems to be no happy medium. So empathy is, in my opinion, underestimated as a leadership tool. We are helping people, we are helping consumers through the biggest purchase of their entire life usually. And we should be training our people to that point where we create relationships and not transactions. Being able to lead a team to understand we need to be that one-stop financial partner to our consumers as opposed to just being there every 4 or 5 or 7 years for them and it being transaction. And I think that's empathy from our team to our consumer as well. Hopefully, whether it's a storm or it's a calm, we are reacting the same way. And we're not losing sight of the fact that we need to be very stable in an unstable and very cyclical business at all times.
It's funny that you said about, relationship management versus just being a transaction, right? So, because people forget relationship is an indirect, discrete way of still keeping volume and margins. And people don't think that this is still a people business.
Yeah,
So, and the fact that you, lead with that, I think that's great. And I'm assuming the team responds very well and is very productive along the way. So, and we need it, in our industry. I think you mentioned it, the whole cyclical thing. We need it, and borrowers are relying on the people side of things, and we need to be there for them. And that starts with how a leader leads and the example that the leader sets for everybody else that touches that borrower. Let me ask another question. I'll probably kick it off to you first, Michelle, in terms of revenue and staffing. So retention seasonality impacts revenue, right? We know that staffing and margins all at once. So how do you personally manage that pressure at the leadership level?
Yeah, I mean, it can feel chaotic. It can feel chaotic if you treat it as unpredictable, right? I mean, everything in mortgage, it's inherently seasonal. I mean, Tammie, that response was absolutely wonderful, by the way. And I think leading with empathy is what we do best as women. I think that was a perfect response. And I love what you said about what we get called. And so for this particular response, I mean, you're speaking to a lot of numbers. So you kind of have to take the emotion out of it a little bit. So for, with margins and revenue, all that, you have to treat it a little bit more structurally. So for that, what you get called a lot is the ball buster.
Another good one.
Yeah. The rate cycles kind of drive everything. Refinance waves, recapture timing. I mean, servicing runoff changes drive the size of your opportunity set. So that impacts your gain on sale margins, your MSR valuations, call center staffing, capital deployment. So the pressure is real, but it's also able to be modeled. So forecast discipline. I mean, women, we're good at discipline, right?
Yeah.
So building rolling forecast scenarios with they're dependent on rate curve movement, CPR assumptions, portfolio age stratifications, historical recapture rates. I think when leadership understands the range of outcomes instead of a single point forecast, I think the emotional pressure drops dramatically, and seasonality becomes a capital planning exercise, not a fire drill. And that's when the emotions can drop a little bit and we can actually start planning and being strategic. And retention is not just revenue, it's asset preservation. And we need to think strategically and work together. Sometimes the smartest move is not to chase every refinance wave if it destroys long-term MSR value.
Is that kind of how you see it too on your side of things, Tammie?
Data is key. And sharing that data with your team and explaining to them what that data means. And unfortunately, you can't do it when you get into the thick of things where it's important that you pay attention to the data. So trying to eliminate the why are we doing this, or what's the purpose behind this, from a decision that people feel like that there are folks sitting up in an ivory tower somewhere making a decision that affects them and they feel like it's affecting them negatively. But those decisions around the data is something that I try to explain to all of my people. If I don't tell you a why behind something that I'm asking you to do, or a strategic process that we're working on, please call my hand on it. Because if you don't understand the why, you can't do your best job at it. Understanding all of those components are very important to me to make sure our team understands where it's going to and why we're going that way.
Can I reiterate this a different way too for the audience? Because there might be some folks listening that aren't in leadership. If you don't know, please ask your leader or tell your leader that you don't know. Because some of us do take for granted that you don't know. We assume that you do. I've done that in the past, and I've assumed that my folks knew, and they didn't tell me that they didn't. And I've wasted time. My business suffered. We could have had decisions made a long time ago. And so if you don't know, we won't judge that. I mean, that tells us a lot that you want to know and that you want to grow. So please tell us that, you need to learn or you don't know, because that helps everyone. That helps the room if you raise your hand and ask.
Yeah, I think that's a really great point.
How do you keep your teams aligned and motivated when it's like this constantly in our industry?
We use drugs. I'm kidding.
Go ahead, Tammie, tell us.
It's the blue pill or the red
I
pill,
have an
depending
open
on the
position,
market.
Selby. Would you like to?
Yeah, let's do
Called
it. That sounds
whiskey.
fun.
I'm totally kidding. That's probably an edit part.
Yes. Oh, that's funny. So yeah, why don't you tell us, Tammie? Let's have you kick us off on that topic.
We try to do cross training as much as we can, which helps scalability. We try to make sure everybody understands what the strategic plan is. Like I go over the budget at the beginning of the year with every individual to make sure that they understand, this is where we've got to be. You also have to look at it from a perspective. There was a time that I didn't know how to manage a P&L. And so somebody had to teach me. And I remind myself of that when I'm having a conversation and I get frustrated with a team member or a full team of why, I wanted to say, why do you not get it? But I remind myself that I didn't always get it either. And someone had to have patience to share that with me. And so talking about the data, back to, I don't mean to be repetitive, but again, data's key. And if they understand, that a loan doesn't stop when the loan closes. That's really when it begins. That's really when you make your money. That's really when the true service begins to your customer and how you manage how they're going to feel about coming back to you as an individual or as a company.
We're very much on the same page. So, I mean, basically volume changes fast, but culture can't, right? So surges and slowdowns are inevitable. So I think survival depends on how you lead through it. You need to protect focus. So when it spikes, everyone wants to chase every file, ops get stretched, credit overlays creep in, margin discipline slips. So you need to keep alignment by targeting borrower profiles, keeping discipline in pricing, and keeping guardrails around turn times. And then it's hard as the leader because you are working 24/7, and also what you really need to do. And I think this is what Tammie was saying in a much more detailed and motherly way, but what you need to do is take the time to communicate, check in with your people, right? I mean, make sure that they're focused, make sure that they're keeping their tasks in line, making sure that they're checking all the boxes, nothing's falling through the cracks, making sure that they're still motivated and engaged. And as soon as, when they're not feeling, when the volatility doesn't feel personal and they're not feeling overwhelmed, they're not feeling overworked, they're feeling that they're still supported and the business is still structured and they have the focus and the business is successful and what they're doing matters. Keep them focused on, they're putting people in homes. That's what this business does. They're helping people make the largest financial decisions of their lives. They might feel like they're just pushing paper and checking boxes and keying numbers in their computer, but keep them focused on what they're really doing. And just communicate. Take that time, have those team meetings, 15 minutes in the morning to have a team huddle, pump them up. Try to keep that culture engaged with them when they feel stretched. Or, if it's a slow time, tell them that all that volume, the volume that they are getting still equals opportunity.
I hear like a lot of reinforcement, right? Because
Yeah.
It does go up and down. Even when it's good, you continue to need to reinforce versus even when it goes down, it's even, that more important to reinforce the big picture. Some of the things that you've talked about and I, want to dig a little more is like, we talk about the focus of, borrowers, putting yourself in the borrower's shoes. Like, if we don't have borrowers, we don't have customers, we don't have a business, right? So I think, the things that y'all have talked about and some of the other questions, it's important to like think about that customer, but also then you think about your internal customers. So, the next question about retention, it's ultimately about relationships, right? With the borrower, with your internal partners. How do you find a way that you influence, especially like we're talking about when the market is volatile and the cycle is high or low? Michelle?
I think Tammie said something like this earlier in the very beginning, but retention isn't a rate strategy, it's a trust strategy. I think she said something like that. And trust behaves very differently in volatility. So with borrowers, think lifetime, not transaction. I think that's what her comment was earlier. And if it was purely a margin play, then you'll make short-term decisions that erode long-term value. You should lead with a mindset that the borrower relationship outlives any rate cycle. The servicing touch points are brand moments, and transparency during volatility builds loyalty. Sometimes that means advising a borrower not to refinance yet, and that builds credibility, and credibility compounds. In volatile markets, trust becomes your competitive edge. And internally, that's most important. I think, Salpi, this was what you were saying earlier, that clarity, right? And break the silos. All teams need to work together. Retention works best when servicing understands margin impact, capital markets understands borrower behavior, and production understands MSR value. When those groups work in isolation, then volatility creates friction. They need to understand everyone's goals. And I can't take credit for this quote, but it's one of my favorite quotes, and I don't even know who to give credit to, but it's trust is the only asset that appreciates in every rate environment. And I absolutely love that quote. And so whoever told that to me in my 26 years in this business, thank you.
I like it.
But
Yeah,
it's one of my favorites.
That's fantastic. You've covered, both of you in your responses covered kind of the next question about, like, in those moments, like, how do you pivot? How do you motivate your team to pivot? Which I think you described. Anything that you would want to touch on, or get, how you keep your team excited in those moments where you do, just as you described, we all have experienced those behind the closed doors conversations, and knowing the market's down. We all, 3 years ago, we all experienced that, right? Like right off the cusp of COVID, when it was like the best in the industry, straight into like the worst we'd had in a really long time. So from your seat, Tammie, like, how do you stay the course versus making a pivotal moment or change for your business?
Placing your strategy to where you do have good bench strength, and you don't just hire bodies to have bodies. So focusing on how you build your team, to me, allows you not to have to pivot as often. And I've been in both places where I didn't do a really good job at it, and in other times where I did do a good job at it. I don't know that you can always do it at 100%, because, again, you give yourself 10 employees, there's got to be at least one that's not going to pull their weight. There's always a weak link somewhere. But that's where it's my job to ensure that management either coaches up or coaches out. So I think delays on when you know that there is an issue causes you to have to pivot quicker than what you normally would when you have to act chaotically rather than in the calm. And again, I can't tell you that I'm perfect at that, but I think making sure that you're not hiring bodies and you're hiring the right kind of people, and are doing the best you can at hiring the right team, creating the bench strength where they all kind of, each one of them enhance the other one's ability to do what they do best. And again, you can do all those things right, and still our markets can cause us to have to really pivot when we don't even want to. And those are hard. I've been in those situations too, where I had to let people go, and they were good people. Good people. They did really good jobs at what they did. They were loyal. And I would say that there's just sometimes there's nothing you can do about it. But the only thing you can do to get to the point where, if you have a choice, try to build your team with their success in mind. Because if they're not successful, you will not be, and neither will the company. And if you focus on that and you invest in them, then hopefully you have to pivot less with a staff anyway.
Yeah, that's great. Michelle, your thoughts in that moment of having to make a pivotal change?
So first off, it's not repetitive, it's consistent, Tammie.
Ooh, I like
In
that.
our responses.
That's fantastic.
Good one.
I think it's important to not pivot because of noise. You have to try to pivot because of signal and know what those signals are. It's knowing which data deserves action. Not every rate move requires a strategy change, and you have to be careful not to overreact. And I think that's a really easy thing to do. So, is this a temporary rate fluctuation or a shift in the forward curve? Are CPR changes seasonal or structural? Is margin compression competitive or credit driven? If the fundamentals of the borrower base or portfolio economics haven't changed, you can stay the course. Reactionary pivots can destroy more value than steady discipline ever will. If profitability per loan is deteriorating while volume rises, and that's a pivot signal. If margin holds and execution is strong, then you can stay the course. I think it's really important, especially as women, we know how to lean on each other, right? I think it's really, really important to have a wide network and people that you can lean on. If you see something shifting in the market, you can, again, raise your hand, lean on people, ask questions. If you're seeing something on just one side of the market and you're questioning it, but you're not seeing it somewhere else, or you're only seeing one lender react and you're wondering why they're reacting and you're wondering if you should, I mean, you can ask questions and you can touch on your network and you can see like if you're not understanding why your data is not making sense or why someone else is reacting before you are. I mean, you can touch on your network and lean on your women, lean on your counterparties, friendly competitors. But and then as far as your team and leading your team through a pivot, I think it's exciting. I mean, they might get frustrated because it does happen where you just finished a pro forma, right? And that takes time. And you're going down one path and you're expecting, this surge in volume in this month. And then something changes over here and you have to completely redo everything. And your team's like, but you just have to keep them motivated and say, well, this is exciting because we're doing this. And they might find it frustrating, but you just got to keep that engagement, keep them motivated and let them know that this is a huge opportunity for the business. And you got to be the cheerleader that we're good at being. But I think, the bottom line is just knowing what to react to and when to pivot. And that's the underlying issue, because I do see a lot of people that do overreact at the wrong thing. And that can be crushing to the business.
Yeah, so it's like watching for signals, but verifying. It's kind of this new thing that I feel like social media is all created is trust but verify, right?
Yes,
Absolutely.
Anymore.
Right.
Well, the one thing, we've talked about in Salpi opening it up about CapitalW, but would love to get y'all's thoughts of women in this, your role, like both of your seats, Tammie and Michelle, like if a woman was thinking about stepping into an executive role during when the market is great or when the market is volatile, any advice that you would recommend or give to a person who was, a woman specifically who was looking to step into that?
Michelle, you want to take it first?
Sure.
Yeah, okay.
Yeah, being in this industry for so long, I don't know the tenure of everyone on this call. It's changed a lot over the last 26 years. So it's interesting to give advice to women today, because stepping into it 26 years ago is very different than it is today. And I absolutely love what women are stepping into now versus what I stepped into 26 years ago. And I love the support that women have today. But just as we mentioned many times on this, know that it's cyclical. And especially in capital markets, just know that it moves fast. And retention cycles will amplify that pressure. You will be in rooms where the tone shifts quickly when numbers move. And my advice is don't confuse that noise with judgment. When margins compress or volume drops, the rooms can get tense. I've been in those tense rooms. I think everyone on this call has probably been in those tense rooms, but just know that tension is about the market, not about your capability. Sometimes women can take those things personally, and just know that leaders manage cycles, they don't internalize them. And please don't do that to yourselves. Try to separate the market from your own personal validation. And I would say that women are often very, very good at building connective tissue across teams. So I would lead into that strength, because fragmentation can occur across departments when this happens, when that volatility hits. People do take it personally. Men do too. Men do too. So you can be the one to tie it all together.
Tammie, your thoughts?
So Michelle said it great. There was a time, and I'm about to throw something in here, y'all can edit if you need to. However, one of the reasons that I went and took my CMB and my AMP was because I did not graduate college in a finance or any other type of degree would put me in this business, like probably most of us. I fell into it accidentally. And so therefore, when I got in it and I started learning, which was a very long time ago, I did not find myself, I found myself in rooms that I wasn't sure why I was there. I doubted myself. So the first thing that I would tell you is if you're in those rooms, don't doubt yourself. You're there for a reason. They didn't just open up the door and you walked into the wrong office. It didn't happen that way.
Yeah.
So believe in yourself and be passionate about what you believe in and be clear to everyone else about what you believe in and how you stand on it, why you made the decision you made, and have strong beliefs about it. Don't let anybody make you waver with the decision you've made. Women are maybe I'm wrong here, but I'll speak from my own personal experience. There are times that I am sitting in a room and I have that imposter feeling. You know, you've read a lot about that.
Yes.
And getting my CMB and being in some of that leadership, there are times that I sit in that room with all of the CMBs, like people like Michelle, who is, you know, the CFO of a very large company. And I'm like, oh my God, what am I doing in this room? And when I do that, I diminish my value. So don't diminish your value. Believe in yourself, put the imposter syndrome to the side, and don't think everything has to be perfect for you to be in the role. Men are really, really good at just doing it when it's not perfect and taking risks. Females don't typically do that as much. We want everything perfect. We want it to align. We need a plan, and it's all got to be working the right way. And I've learned a really hard lesson several times. You can't always do that.
Yeah.
So don't expect it all to be perfect. Don't have the imposter syndrome. Believe in yourself. You're in the room because you earned the seat to be in the room. Now just do your thing and be who you are and do it well.
That's really powerful because I do think it's so common. Imposter is a real thing for women. And so often that you, as you describe, right, is you get brought into a room and you start to question yourself because maybe they ask you a question you don't know. And that immediately you start to get into your own head. And I think it's very important that, you know, kind of what we all talked about in the very beginning. First, start with empathy, right? Put yourself in that customer's shoes. And sometimes I think for us as women, we forget to do that. We have empathy for everybody, but we're not empathetic for ourselves at times, right? To give ourselves credit. So I love hearing, you know, thank you, Tammie and Michelle, for sharing your perspective today. You know, I think for us, borrower retention, you know, like Michelle, maybe what it was 15 years ago is very different than what it is today. It continues to change over and over. And I think, you know, the key things that we heard today from each of you, it's about the communication, the transparency, being empathetic to a customer, being empathetic to the people you work with at times, right? Building that trust, I think is so key with borrowers within the organization. So just again, thank you both for your time today. It was really exciting to hear each of your perspectives. You know, this conversation, as Salpi mentioned, is part of our broader CapitalW collective. That community, we're dedicated to elevating women across capital markets, mortgage banking, financial services. And we're really trying to continue to connect through education and real world insight, as Tammie and Michelle as well gave today. To learn more about CapitalW Collective, please explore upcoming conversations, get involved. Please visit our website, CapitalW Collective. Be sure to subscribe, share this episode, and tune in next time to continue to hear spotlights of leadership, strategy, innovation, shaping the future of our industry with a focus of women. Until next time, Thank you both for your time.
Thank you.
Thank you.
Yeah.